We're focusing on that FXE currency euro. Once again, that closing price, there's that bid and ask. You're going to be watching this one, okay, for directional movement along with the fear indicators. But most importantly is look at the bid and the ask here. And they marked down these calls tremendously and had marked up the put side. It's a half-day options expiration opening bell. We're also going to be featuring that 370 call. This is going into that opening bell in 1 minute, 6:29 a.m. Pacific Standard Time. Net weighted buyers and sellers, as this is the only market maker school. It's how I make a market between the public. Here it is. Look, you're gapping back down. MMTs are going to mark these calls down. They're going to mark these calls down. I'm out here at 3.70 right now. Let's see what they do on that 565. Opening bell is underway. There's that first print. 10 out. You got a mark down to $1.95. They closed at $7.50. They marked them down. Oh, now it's only down $4. That's how you make that market. Look at that. What a markdown on the opening bell. 10 contracts went off at $1.95. I'm getting in on that 575. They marked it down. I'm buying at 30 pennies. That low is 50 pennies. I'm bidding that live at 30 pennies. 5 pennies above there. Watch that support level. Watch how that thing bounces. There's those bids. They marked them down from $1.90. I want to get hit. Why not? I'm taking out $1.60 risk on that opening bell. Look at that bid. Bid 30, buy 70. You got to see 40. Do I see 40? Take it up to 40. Why that thing is pinging off of that low. Take it up to 40. Why it's pinging off that low. 50 cents. You'd be a dime below the whole low right there, right now. Bid that 40. There you go. This is live. It's here. It's now. It's all about just stealing that bid. You can see how these bids were. Well, my goodness, I told people they were going to mark this thing down, and they marked that thing down on that weekly call from $7.50 to $1.95. Then the next print was $3.50, $3.80. That's what making a market is. Now they got a high. They're still way down. They've marked down the premium in the pit because the markets were made here. And guess what? Maybe you never see that high again. It doesn't matter. Markets are made right now on 82 contracts. Look at the spreads. Look at the prints. Look at the spreads. Look at the prints. Look at the bid. Look at the ask. Look at what the equity is doing. Remember, MMT, you're in a new training subject. And the training subject is light volume in the equity equals a totally different pricing control in the options. Everything that I was talking to you about happened right here. Look, in pre-market, I talked about how they marked that stuff down. Why? Because that low volume on that first minute print created where they walked away from the bid, and if your price was down there, you get hit. And you can see the next prints that came in, and now you can see the bid and ask is 380 by 450. But it's how that bottom market was made. MMT on a Thanksgiving holiday, half a day trading weekend that's upon us. It's Friday. It's 3 minutes into the tape. It's 11/25/2011. How to steal that bid on the opening bell. This will go under the topic under options. Once again, we are the only market maker school out here. The regular people, don't go out there. If you're watching the video, excuse me, Mr. Flag, if you're watching the video for the first time, hey, don't try to get involved because these are for the MMGs. Marking that bid down from that close and getting hit down there on that drop down bid. And you can see where the contracts were made right there. And you can see where that light volume, the light opening bell volume has changed the pricing control in the option. There it is. Now, on this side of the market, look at what they've done. 997 was the close on that 580 put. That's deep in the money on a weekly with a half a day expiration. And within a half a day options expiration, you can see that markdown of that wholesale bid to $1.95 from that close on that opening bell and selling it back to the public up here. Even if you're selling it back at $4, you're doing okay. Or $3.80, or you're selling. But it's that drop down bid. You're still below that $7.50 marked down to $1.95. Anybody get hit over here on these contracts? Yes or no? Here we are back live, and we're right now we're populating our diamonds on our platform, but nonetheless, you can see where these calls hit at 540. They were marked on the opening bell. You've seen those prints. You've seen them. You've seen them. $1.95 markdown from $7.50. Don't you think that's a huge markdown? That's why all your option courses and your day trading option courses ain't going to work that bid and ask like that on what we call a professional markdown, and knowing where the market can get marked down for the market maker to make a spread. Look at that. Look at that. The low. But look, you would have had to have gotten in. These were the only prices you would have had a chance. Maybe you could have gotten in the middle there, but it doesn't matter. You could have, even if you got in at $4, look at the bid and ask. It's 420 by 670. Look at the bid. Now it's 560 by 670. Look at that. And we're busting out. We're breaking out right now, David. Where are we at on these over here? We have to have a profit objective here. We have to have a profit objective. We got above the high. We got into positive territory live here on the opening bell, 6:38 a.m. Pacific Standard Time. Happy Thanksgiving Day to everyone. Truly, from SMF and MMTs alike. Look at that bid. Look at that bid. Look at that bid. Now, you got to have profit objective. People that got hit down there, you need to be out there at $1.30. Sell into it at $1.30 from your inches. Shit, that would be $1.10. That is if you can keep breaking out now. Say now. Did you guys steal the bid? Hey, did you steal the bid on that left elbow? Let it shine. All right, MMTs, here we go. Look at it. That was a perfect trade. You got that. Everything that we talked about in pre-market would have been that diamond top. And those diamonds would be ripping like that, and I told Bill Merritt like that. And that was with that markdown left elbow gap. Look at that teeny expansion. Not only thing, look at that 0.27 high with the negative 0. So you could have bought it wholesale here at a half delta. That's why I always tell Bill Merritt, set that half delta, or if it shoots down through there, that's why you have those alarms and those entries set, because that's a wholesale bid, and it's made that 3, that 6, that 9, that's 12. That's a happy Thanksgiving Day, left elbow gap down, half trading day weekend, and I'm thromboning. And this is what I said in pre-market. If you go take a look, I am breaking higher. There's nothing that would tell me I bought them. Look at that breakout. Who got hit at $1.30? Hey, update me on that bid and ask. You're coming up to that $1.30. Oh, my goodness, and you all stole that bid off the bottom. And that's, oh, my goodness, you sold into that.